At 12:01 Eastern Standard Time this morning, we were blessed with 309 pages of the Clarity Act ripe for markup this Thursday. We finally got a window into what they will actually be discussing in the Senate Banking Committee. Now, there are some parts that we expected and some parts that were definitely unexpected. We're going to plow through all of that today and the rest of the news that's moving markets. Let's go. What is up, party people? Welcome to the Daily Wolf Live on Yahoo Finance. I'm your host, Scott Melker, also known as the Wolf of All Streets. You can find me right there at Scott Melker on all of these social media platforms. Now, we're going to spend a lot of time today talking about the contents of the Clarity Act, because clearly that is the biggest story right now in markets and in crypto in general. So we'll tell you what happened right here. The Senate just dropped a 309-page crypto bill at midnight. Will the Clarity Act finally give institutions the green light? Now, we're going to talk about that framing, which is brilliant here from Yahoo Finance here on the Crypto Hub, because I'm going to tell you as we go through the Clarity Act why the banks actually need this more than the crypto industry does, which is exactly the framing they just gave. Will it finally give institutions the green light? So first of all, this is a 309 pages, as I said before. It had 9 separate titles. This is a full rewrite from the bill that we saw from the Senate Banking Committee last January. Now, we know the Senate Banking Committee has 13 Republicans and 11 Democrats, so they will be able to pass a markup on party lines, assuming nothing dramatic changes. We still have Polymarket now saying 75% of passage of the whole bill in 2026. But as you know, we need to get through the Senate Banking Committee, then a reconciliation with the Agriculture Committee, then to the Senate floor where we'll need 7 Democrats, and then to the president's desk. And all of this has to happen before July 4th. Now, I obviously woke up at 12:02 a.m. because I had an alarm set for Clarity Act text dropping, and I read all 309 pages for you. And by read 309 pages, I mean that I had my AI tell me what was in this bill and tell me what to think about it. And I'm going to present that to you now. We actually did go for the greatest hits in this bill, and I'm just going to go through them one by one because I think there's a lot here that matters. In Section 105, we had an Ripple XRP precedent. You may remember that Ripple went to battle in the court system against the SEC and won. Well, this says that if there was a court order on behalf of your entity, that the SEC cannot reverse it. Ripple XRP will forever remain not a security, and that cannot be reversed. Now, in Section 205, they talked about Bitcoin ATMs. I've told you stories in the past about countries trying to ban these because of all the fraud that's rampant using them. Now, I made the point that these are agnostic technologies that criminals have found a way to use, much like an iPhone can be used by a drug dealer to make a call and do a drug deal, but you don't ban an iPhone or the technology that's underlying it here. Well, what they're going to do here is give a mandatory customer service hotline and support. So basically, the U.S. is regulating these ATMs, will allow them to remain, unlike Canada that is trying to ban them. But let's be honest, like, Canada's the worst. I've heard that. Canada, I love you. I love you guys. I'm sorry. I just used to watch South Park a lot. Now, the main section worth discussing here is Section 401. This goes back to what I was telling you about the beginning, about the banks needing this more than the crypto industry does. So this is the big banking unlock. It amends the Bank Holding Company Act. It amends the National Bank Act. It amends 3 or 4 other state-level banking acts. And it will allow banks, credit unions, financial holding companies to use digital assets and blockchain for any activity they're already authorized to do, including payments, lending, custody, and trading. Now, this may seem surprising that they can't do those things, but let's remember, the crypto industry actually is in a great position right now, especially Coinbase, who have been offering yield on stablecoins. But right now, Coinbase is humming along with over 100 million customers. Stablecoins are over a $300 billion market cap asset. And we're seeing crypto adoption on crypto rails and blockchain rails all around the world. And the banks can't do any of that. And they want to. Now, this is basically like the banks are Blockbuster sitting there watching Netflix eat their lunch, and they can't even offer streaming services because they don't have the legislative or regulatory clarity to do so. You may remember that under the Gensler regime, under President Biden, there was a little memo called SAB 121. And what this memo said was that if you wanted to custody crypto assets as an institution, you had to count them as a liability rather than an asset. So Let's imagine that Bank of New York Mellon wanted to custody $100 billion in Bitcoin. They had to have $100 billion in cash on the other side of the balance sheet as an asset to offset that liability. Now, of course, the minute that Trump came in and a new SEC, they got rid of SAB 121, but we have not codified those kind of things into law. So right now, the banking industry wants to use stablecoins. They want to use these assets for lending. They want to take Bitcoin as pristine collateral, and they can't. So what's secretly underlying all of this is that this is actually more of an update to the banking legislations of the past, of the last 100 years, and has less to do actually with what crypto can do. Now, moving on to Section 404, interestingly, the yield language did not change at all. We've seen the bank lobby freaking out over the past few days, even on a Sunday telling bank CEOs to call their senators. None of that language was changed, but that could change with amendments and markup. Now, we have very interesting language in Section 601 and 604 around software developers. This was a huge and unexpected win for decentralized finance and for developers. What it said is software developers are exempt from federal and state securities laws for pure dev activity. You cannot be prosecuted simply for creating code, regardless of what it is used for. But they did go on to say that it preserves criminal liability for intentional crime facilitation. So if the dev knew that it would be used for crime and actively utilizes it for crime, they can still be prosecuted. And that's where we cross over with some of the existing cases like Samurai Wallet and Tornado Cash. Now, Section 605, Keep Your Coins Act, another huge win for the crypto industry. This is self-custody codified as a federal right, meaning that you will be able to hold your coins in self-custody. We've long seen Democrats and others trying to remove that right because they want to see into all your financial transactions. This is like the old days of having cash in your mattress. You can have coins in self-custody, and that right will never be violated. Now, one that would have been very helpful in 2022 is Section 701 and 702, the bankruptcy framework here. Now, if you were a part of the crypto industry in 2022, you remember FTX, Celsius, BlockFi, and for me, especially Voyager, because I was one of their biggest creditors. Now, there was a huge debate that's still ongoing in the courts as to if you lost tokens on one of those platforms, whether they were actually yours or whether you had effectively given them to the platform. They were property of the platform who could then use them to earn yield and such. Well, the language now says that the crypto on a failed exchange is legally yours. It is not part of the estate. That would mean that you would actually get paid back in coins and not the dollar equivalent of what your tokens were worth at the bottom of the bankruptcy declaration. Absolutely huge here. Now, of course, there's still questions about commingling, and if the funds aren't there, the funds aren't there. But still, very, very clear language here on who these tokens belong to. Now, the most important thing here, I want you to pay attention very carefully, is Section 904. This was pages 300 and 309 to 309 of the 309 pages. Of course, the most important part is at the end. The Build Now Act, checks notes, a housing pilot program for community development, block grant jurisdictions. What the? This has absolutely nothing to do with crypto. This is a naked horse trade in broad daylight for somebody's vote. And I want to know who that person is because I got $50 and I need some gerrymandering done in my district. No, but seriously, like this has nothing to do with crypto. The entire act is about what you can do in crypto, giving clarity to the banks. And then in the last 9 pages, they gratuitously throw in language about housing. Now, that's what's in the act. Let me tell you what's not in the act. Literally a single word about ethics. And I've told you that that is the live grenade that's been tossed in the room that nobody is talking about. They're just waiting for it to go off. Now, in September 2025, there was strict ethics language in the Senate Banking Committee version of the Clarity Act. In January, it was watered down. In May, magically disappeared. I just did magic. It magically disappeared. Now, Elizabeth Warren said, this is going to turbocharge Donald Trump's crypto corruption. But the secret here is that Tim Scott knows that he has the votes. As I told you, they can go on partisan lines and he can win this. But when it goes to reconciliation with agriculture, there's going to be a big problem because the Ethics Act is coming back. Schiff has said it's a non-starter. Gillibrand, who's very pro-crypto, has said it's a non-starter. This has not been litigated at all. That fight is still reserved for the merger of these two bills. Okay, that was almost 10 minutes on the Clarity Act, but now you know what's in there and why it matters and why the banks need it more probably even than the crypto industry. Now, the next story today, a lot of these are going to be quick highlights on things I've discussed before. Bitcoin miner Marathon sold 1.5 billion of Bitcoin as it shifts towards AI infrastructure. Now, we knew that this was coming, but seeing it in their quarterly earnings really showed you exactly what Bitcoin miners are going to have to do. You might remember last year, Bitcoin miner Marathon, trading under MARA, they tried to follow the Saylor strategy. They raised a convertible note, said they were going to become a Bitcoin treasury company, buy more Bitcoin. But what they've actually done here is pay off their credit lines, pay off their convertible notes, which they did to their credit at a discount, and sell off a large portion of their Bitcoin so that they can invest more heavily into AI infrastructure. They're not going to buy any more Bitcoin mining equipment, they said. So this is a very interesting nuance right here. Bitcoin miners are no longer Bitcoin miners. They are AI companies that will also mine Bitcoin. Now, Saylor floated the idea of selling some Bitcoin last week on my show. You heard it here first. But Fred Thiel, the CEO of Marathon, he went ahead and did it. So this is the biggest Bitcoin miner in America, selling their Bitcoin and moving wholesale into infrastructure. Now, we got another quick story I wanted to show you. Anthropic warns against unauthorized stock exposure as token markets imply $1 trillion valuation. Now, you probably know that through special purpose vehicles and secondary sales, you can pretty much gain access if you're a accredited investor or have access to these tokenized platforms. You can buy private stock for things that are likely to IPO in the future. What happens is, investors in Series A might want to sell to people at a Series B valuation. I think we're up to like Series G on Anthropic. And there's a robust secondary market for doing so. Well, Anthropic is saying that is all void, which is the strongest and most aggressive language you can possibly give, meaning that those shares that you bought through a special purpose vehicle or some tokenized entity that's been selling them, we even have some of the biggest platforms doing this, could likely be void, and you could have a promissory note that is worth precisely $0. So there's going to be a huge, huge fight, because if Anthropic does it, others might follow. And now both your secondary shares and the tokenized version are likely massively at risk. Could get very, very, very ugly in the secondary market for private stock. Now, this is just an update on yesterday. I told you obviously about the $222 million deal on a pre-sale that both BlackRock and Apollo invested in for Circle's new blockchain Arc. Well, we can debate all day what it means, whether it's good, bad for the crypto industry, but the fact is the market spoke and Circle stock went up 16% yesterday. As I told you, Circle has 25% of that network. At the $3 billion implied valuation, that's $750 million they just added to their balance sheet. And even Cathie Wood likes it. Arc bought $5.5 million more worth of Circle on Monday. So the stock's down a bit today, but obviously, the market speaks louder than anything else, and the market really liked that announcement and that deal. Now, I've got one more story that I wanted to show to you very, very quickly before we wrap up. CME Group to launch Bitcoin volatility futures contract. You'll notice this is from May 5th, but I didn't hear anyone talking about it. It's just on my radar, and I think it's actually really, really important. So any person who invests in the stock market knows that traders and investors often watch the VIX, right? The volatility of the stock market index. It can be traded based on the future. Well, now we are getting that in a ticker BVI officially from the CME for Bitcoin volatility. Now, there's a lot of different entities that use the VIX to trade around their positions. So institutional traders have always traded volatility. ETF issuers have always used it as a clean tool to hedge their positions. Now you'll be able to do that around Bitcoin. And it's a big story to me because it ties into everything else that we're seeing, which is that largely Bitcoin has been over on the side, crypto even further on the side from institutional adoption, because the products didn't exist to trade this in the same way that you could trade everything else. We're now just getting the structure in place for the largest institutions to actually take meaningful positions here, and that is a trend that only goes in one direction. Morgan Stanley, they supported this, and we've seen all the other huge news from Morgan Stanley over the past few weeks. Bitcoin's becoming fully institutionalized, and there's nothing the world can do to stop it. Now, I still am very skeptical if the Clarity Act gets passed. We've talked about what's in there, but it may be more important what's not in there. Certainly, for this getting passed, there's going to be some ethics language, and it's going to be very hard to see a compromise on that. We're going to keep breaking it down as the week goes on. That's it for today's Daily Wolf. See you tomorrow. Peace.